Our final guests today are both experts when it comes to alternative routes to credit. Christine Moore is CEO of Manchester Credit Union, and Sharon MacPherson is the CEO of Scotcash. Together, they'll help us understand credit unions and other community lenders. So, starting with you, Christine, could you tell me what a credit union is?
Yes, so a credit union is a member-owned financial cooperative. You have to be a member to join, and those members save up in savings accounts, and then we use that pool of savings to lend to people who need to borrow. So in the UK, they were mainly set up initially as anti-poverty initiatives, and because of that, our main membership is made up of people on benefits or low incomes. Not all of our members are on benefits and low incomes, but a large proportion of them are.
And Sharon, Scotcash is a CDFI. What is a CDFI and how does that differ from a credit union?
Yes, a CDFI, which stands for Community Development Financial Institution, which granted is a bit of a mouthful, has a mission to serve the needs of low and middle income individuals, with a specific focus on those who have been underserved or ignored by traditional banks and lending. And we were set up really to create financial self-sufficiency within these underserved communities in order to trigger overall economic growth and community redevelopment. So in many ways, we are like a credit unions, and credit unions and CDFIs are both part of the UK community finance sector, and we do collaborate across many different projects. However, there are several key differences between credit unions and CDFIs, which means that CDFIs can provide complementary rather than competitive services. And because CDFIs don't have an interest rate cap, they're able to price their loans to serve a riskier customer base than even credit unions are able to lend to. So by working in partnership, credit unions and CDFIs can therefore provide widespread and seamless access to affordable finance, and thus a comprehensive and robust alternative to high-cost lending. Just another important difference is that CDFIs are not deposit takers and do not have members. And this means that we aren't able to offer savings accounts along with our loans directly to our customers. But again, we do work in partnership with credit unions to provide access to those products too.
One of the main differences as well, Sharon, is that because CDFIs are not deposit takers, I think it's fair to say that credit unions are more rigorously regulated, and we have very strict confines about who can be a member. So very often that might be geographically based. So we can't lend to people at the moment outside of Greater Manchester, for example, whereas a CDFI can, as Sharon does, they can operate nationally. So there are quite a few differences there, yeah. Mm-hmm. But as Sharon said, complementary.
Can you sum up the role that a credit union or a CDFI plays in the credit journey, and why is your support so important?
Obviously, we have a fundamental role in helping people to apply for credit. It's because a lot of our members are kind of, people who can't access mainstream financial services. People often need a lot of help when applying for loans. So even though we do now do the majority of our loan applications online, we are in touch with each individual member and helping them through that journey.
So you're almost kind of benefiting what we talked about in episode 1 as well, then, aren't you? You're helping people get access to credit, but you're also encouraging financial well-being by encouraging saving.
Yes, one of the main things that we do is, because what we find is, especially for people who are on low incomes, find it very difficult to save. So most people in those circumstances don't come to us to open a savings account. They come to us because they want to borrow a small loan, usually for essential bills. But the beauty of what we do is that we can lend to them straight away, but they have to save while they're paying that loan back. So it's called Save As You Borrow. So while they're repaying the loan, because the interest rates are so low, they can, compared to what they could get elsewhere, say from a doorstep lender or a payday lender, they're able to save a little bit each time they make a loan repayment, they put a little bit into the savings. So whilst they're repaying the loan, they're building their financial resilience for the future.
And Sharon, what about the role of a CDFI in that journey?
Reflecting on what Christine said, establishing credit is a journey, and a good credit score is important for lots of reasons. So as you start to need credit, you realise the importance of building a good credit score. From getting a loan to go on holiday or funding expensive events like Christmas, a good credit score can be really helpful in helping you manage your financial goals. And many customers we help are locked out of mainstream options. Smaller loans are not so readily available, and where they are, they can be expensive, especially if you've had problems making repayments to your credit in the past, or even if you've never had a credit history. And there's lots of information on how to build your credit score, but starting with the basics along with avoiding bad credit habits can be a really good place to start. And CDFIs like Scotcash can help you to rebuild your credit score. We're more likely to be flexible than others if you don't have a great credit history. And by keeping your loan up to date, you're able to show other lenders who might be looking at your credit file in the future that you've got a history of on-time monthly repayments. So Scotcash really plays that role in terms of helping you get back on track with your financial goals. And although it doesn't happen overnight, it comes with lots of benefits, making it easier to borrow in the future and getting better interest rates. Our typical customer has likely been rejected for a loan by others and can really feel frustrated by the lack of options available to them. And we often receive customer comments about how relieved they are that someone took a chance on them at a time when they really needed it. So whilst typical commercial lenders have shareholders to satisfy, CDFIs and credit unions like Scotcash and Manchester credit unions are not for profit. They provides us with the flexibility to provide value to the community without having to answer to shareholders. And it's such a rewarding place to work, and to know that we're helping thousands of people realise their financial aims in a socially responsible way. And that's one of the key benefits of working at Scotcash.
Are there any other ways that credit unions, for example, differ from traditional or mainstream lenders?
I think one way in particular, we have a product called a family loan, which is very, very popular. And we don't actually do a credit check on that loan. It's a maximum of £500. And the reason we don't do that is that most of the people who apply for those loans wouldn't be able to get a loan from anybody from elsewhere. And they've either got no credit history or a poor credit history, just from things in the past. They might have had a CCJ for something like a mobile phone bill or something like that. And so by taking that loan out with us, although we don't do the credit check, we do report them to Experian. And so, they start to build a good credit file by paying us back regularly. And we find that's a really important way in, to start building your credit profile.
And Sharon, aside from shareholders that you've mentioned, how do CDFIs differ from traditional lenders?
I think Christine hit the nail on the head there and talked about the structure in terms of we're really here along with credit unions to serve those customers that traditional banks can't really help. And it's that structure that's one of the key differences between CDFIs and traditional lenders. Recent data we see from the Institute of Fiscal Studies shows that the poorest fifth of the population have seen an average of £170 per month decline in their bank balances because of the pandemic, and that the pandemic is likely to lead to long-term economic scarring, which is going to exacerbate financial exclusion. And traditional lenders are constrained in what they can do to meet the needs of those groups, as Christine's mentioned, by credit score driven underwriting models that make it difficult to meet the needs of low income households. And what we're trying to do is provide bespoke products and services that are really designed for the specific needs of our customers. So for example, one of the things that Scotcash does, because we recognise we're dealing with low income households who may well not even be aware of the benefits they're able to claim, we can now automatically check a customer's circumstances to ensure they're getting all the benefits they're entitled to. and provide support to maximise their income. And we recognise that by doing so, we're increasing the probability that our customers can successfully build their credit history at the same time as improving their overall financial situation.
And is there a typical journey that somebody would go through with you?
Well, I mean, I think one thing to say is it can be really daunting making an application for credit when you're unsure of the outcome. And if you've been turned down for a personal loan, it can actually feel like a personal rejection that you don't really want to repeat. But just because you've been rejected in the past, it doesn't have to be your last chance. And most of our customers just fill out a simple online form, provide us with their last 8 weeks bank statements, and our online journey has been developed just to be as straightforward as possible. We're using the latest secure financial technology, which is great to be able to see us use as a small organisation, use that fintech. And sometimes we might come back, Gareth, to people and ask more questions so we can better understand their situations. But in all cases, we're really trying to help. So, from our omni-channel support, it provides customers with a quick and efficient response to their inquiries and their loan applications. And I think a lot of people worry about applying for credit, but I would just say, there's a lot you can do to improve your odds. Some applicants to Scotcash never provide the documentation that allows us to say yes. So, and loans almost always require several forms of paperwork, including employment and income information. So if you are going to apply, make sure your paperwork's in order before you apply, and just take a chance on Scotcash.
Christine?
Yeah, exactly the same. One of the things that gets people off the journey is if they don't respond, like for example open banking. That's really helped us over the last few months. Be able to respond quickly, because one of the things we've been able to do with the new fintech, and we work with Incuto on that, is to improve the time it takes to do the actual loan, and open banking has helped fantastically with that. So, but it is an omni-channel approach, and we contact people individually. We might telephone them, we'll text them, we'll email them. It is an online journey, but it's, we provide support at every step of the way. And as long as people, get back to us if we do need to request any information, then, it's fairly straightforward. And, we've come great strides in the last year or two, especially since COVID, with our digital journeys improved dramatically, from what it was a couple of years ago.
Christine Moore, Manchester Credit Union, Sharon MacPherson from Scotcash. Thank you so much.
Thank you.
Thank you. Thanks.
So there we have it. Thank you to all my guests on today's episode of Know the Score: John Webb, David Hollingworth, Christine Moore and Sharon MacPherson. I think my takeaway from this episode is that the use of credit isn't right for everyone's situations, particularly if you're in debt, for example. However, managed well, it can be a valuable tool to help build financial stability and your credit score. Indeed, in 2010, when my financial health took a dive, my credit score was an invaluable metric to chart my progress and recovery. And now, of course, it's free to access. Before I go, a quick reminder, this podcast is for educational purposes only and does not constitute financial advice. Know the Score provides general information only. For individual financial advice about your circumstances, you should talk to an independent financial advisor. And you can find out more about credit scores at Experian.co.uk. In the meantime, be sure to subscribe, share and leave a review to let us know what you think of Know the Score. And that way you'll be the first to hear about our new episodes. For now though, thank you for listening and goodbye.